Costco stock is down 15% year to date. That is after reporting Q1 earnings after the bell today. We will get into those earnings. We'll take a look at the revenue estimates for the upcoming quarters as well. Look at this from a valuation perspective, and then you got to look at this from a technical perspective, since for basically 40 years, this has been making the same technical pattern. So we'll talk about, is it close to a good buying opportunity? Many of you own Costco shares already, so you're probably wondering if you add shares at this time. We'll talk about that and more on today's show. What is going on, investors? Hopefully guys are doing well out there, still towards the tail end of earnings season when we start talking about Costco Corporation, ticker symbol COST. Over the last year, like we said, stock down 15%. Over the last year, though, down about 9%. And look, compared to a lot of investments, this one's actually held up relatively nicely. Now, those Q1 earnings came out after the bell today. We missed basically on the top and the bottom. We missed on that revenue side by about $240 million. Revenue coming in at $54.44 billion. That was 8.1% growth year over year. Wall Street was expecting a number closer to about 8.6% growth year over year. On that earnings side, estimates were for about 316. It actually came in at about 310. So a little bit of speculation if the upcoming quarters are going to come in line at Costco. On that earnings side, you're looking at kind of low, even like kind of high teens growth rate on that earnings side. On the revenue side, you're looking at basically high single digits, mid to high single digits, 7, 8, 9% grower for the foreseeable over at Costco, mainly because their business model is so predictable. We'll talk about more of that here in a second. Now, in terms of the valuation on this one, okay, we've got a company that is worth well north of about $210 billion. When you look at the quarterly sales revenue, obviously this is a company that generates actually in excess of $200 billion of revenue every single year. So from a price to sales basis, this company actually trades relatively in line with when you're looking at Amazon, certainly like a Walmart, and maybe even potentially a Target as well. Has that kind of retailer multiple on those sales. But from the price to earnings perspective, this one actually trades at a pretty decent premium. These are trailing 12-month gap price to earnings. You're trading well north of about 36 times on those earnings. But what I did want to point out from the beginning is, like we said, those earnings growth, at least according to analysts, actually that earnings growth expected to be relatively solid for the upcoming quarters. Now, let's dive into these Q1 numbers. We had that revenue coming in at $53.4 billion. Again, that was about 8% growth year over year. Last year, you were just south of about $50 billion. Now, here's the key thing with this company. Are these membership fees? I didn't see anything in the press release about a price increase, but what I did notice year over year, you went from $946 up to, you crossed the $1 billion mark on those membership fees. And those membership fees, as you can imagine, very high margin. And anytime you pass along some kind of price increase with those membership fees, it basically just flows right to the top and almost to the bottom line over at Costco. Now, their operating expenses, their merchandising costs, this is why this company continues to just remain a wonderful place to shop. Your merchandise cost off of $53.4 billion worth of revenue was $47.7 billion worth of cost. So they are very low single-digit margins on the merchandise that they actually sell in the store. Their selling general administrative costs didn't go up a whole lot year over year, from 4.7 up to 4.9. Costco in general has the reputation of paying its employees a decent wage, and so they haven't really probably had to fluctuate that very much over the last year or two. Your operating income at Costco, which is your revenue minus your expenses, came in at $1.75 billion last year. It was right around $1.7 billion. So just incrementally kind of ticking up on that operating income side. Flow all the way down to a net income, and you're basically flat a little bit year over year. You went from $1.32 billion up to about $1.36 billion. This is after you pay taxes. This is after you earn a little bit of interest on the cash that the company has in their bank account as well. In terms of the performance from the stores, U.S. stores are humming right along. Adjusted for exchange rates and changes in gasoline prices, U.S. stores were up 9.6% 3.3%, Canada up 2.4%. The weakness in this company is coming from the international markets, which include Puerto Rico, Canada, Mexico, United Kingdom, Japan, Korea, and Taiwan, among other countries. Their e-commerce business slipped year over year, down about 3.7%, but the company never has put a lot of emphasis on that to the benefit, actually, probably of Amazon and other retailers like Target and Walmart. From a balance sheet perspective, not a lot has changed. They do have some elevated merchandise inventory, but this is not really a comparable period. We're comparing the end of August to the end of November, where you'd expect Costco to probably have some more products inside. Also, what we know when we've looked at Walmart and other retailers is anybody that is selling food, they are cycling through the inflation a lot faster than kind of companies that are sitting on kind of hardline goods. So as the price of food ticks up, it obviously hits the inventory number a lot faster over at Costco than maybe like a sofa maker or maybe even like Amazon. Got plenty of cash over at this company. You've got a little bit of long-term debt, but it's nothing that I would be concerned about. Also, the always thing that you need to keep in mind when it comes to debt in a rising interest rate environment is maybe you pay a little bit of more money on expenses, especially if you had to refinance that, but you're earning more interest income. Look at this company. They earned $53 million worth of interest income in the most recent quarter, and they spent $34 million on interest expenses. So they're net positive when it comes to that. And that's it with Costco. They don't give you cash flows, but I don't really think you need to see it. Now, in terms of the technical pattern in the technical chart, this one, as you've been noticing, probably if you've watched our videos in the past, this one has set up basically perfectly for the last almost 40 years with this company. It is traded in a relatively tight channel. There's been some very small deviations, but essentially when this company gets to the top of the channel, if you like to take profits in these types of stocks or you want to take profits, that would be the time to do it. This is a monthly chart, so every single one of these candles represents a month, and you see over the last 40 years, we've got this bottom trend line, which I'll change to maybe a color purple so we can distinguish them a little bit. Anytime you come down to the purple line, it is obviously represented a very good buying opportunity, but your buying opportunity closes very quickly with these companies. Again, this is a 40-year chart essentially, and it's touched this purple line just a handful of months over that period of time. So you wouldn't necessarily want to get too cute from that. We're essentially in the middle of this range right now. So it's not the worst spot, but it's probably not the best spot to accumulate Costco. What I've noticed is for us to get from where the stock is right now at about $475 in the after hours, for it to move down to the bottom of the channel, you're looking between a 10 to 15% move, depending on how quickly it moves down there. Given that this company has not touched the bottom of that channel in a while, I probably would jump the gun on this one. And in the shorter term, if we got down into south of the 450s on this stock, probably would be a spot where I wouldn't necessarily load up on a position, but something where I could certainly see a long-term holder. As you get dividends, you get a little bit of a buyback with this company, and you also get those special dividends, likely one coming probably sometime next year. Be an area where maybe you add a very small position to your Costco shares. Certainly not a cheap company from a price to earnings, but one that chugs out consistent earnings growth because their business model draws customers in, and those membership fees always tick up every few years, and that drives a lot of top line, but more importantly, bottom line revenue growth every couple of years. That was Costco Wholesale. Hopefully you guys enjoyed today's video. I'll be back again soon with more. Good luck with your investments.